Hello and welcome to the Pipnotic Symposium for the 31st of January 2018. I have a couple of boys in the other room playing foosball, so I do apologize for the sound of goals and cheering in the background. Okay, I'm going to briefly cover trading on the shorter time frames, because I know this is quite important for a lot of the people in the room. So many people want to trade perhaps shorter time, in contrast to what a lot of the other members like to do on the kind of the higher time frames, the daily, weekly, monthly, and so on and so forth. So for this one, we're gonna have a look at what's cooking on the 1 hour chart and below. So I'm going to change the template to let's go here. I'm going to put the default configuration on. Then I'm going to go to the hourly chart. Then we're going to have a look at what we have here. Okay, let's start on maybe the dollar, the Euro American dollar. Okay, so what you want to do before you do anything at all, you have to know what direction you want to be trading in. So the best thing to do is, for gauging the trend, I wouldn't go any lower than the 1 hour. So even if you have your entries on the 15-minute chart, I suggest that you go to the hourly chart and you zoom out like that, and you can see very clearly that things are moving higher. So you want to be buying. Here we have like a longer term trade here, and here we have kind of a shorter term trade here, which is actually based on this hourly area of demand. So zoom out all the way on the hourly chart. You want to be buying. Good. Okay, so now you go down and you focus on what you can see here. So what you want to do is you want to focus on very sharp releases. And just to show you an example of what they look like, we have one here. We have one here. We have another one here. We have another one here. This is the stuff that you want to be looking for. You don't want to look at anything like this. This is, your eye shouldn't even register this. It should automatically gravitate to stuff like this. This is like a bare minimum, or stuff like this, or this, or this up here. And so what you want to do is you want to also look at, let me draw for example, let's say we have price goes like this, it accumulates, it goes higher, it goes sideways for a while, and then it goes down. The area that you will consider for a trade, let's assume that we like this one here, you want this to do something, to accomplish something. When I say accomplish, you want to focus on areas of supply and demand that are capable or strong enough to consume something on the opposing side of the market. So when price left here, what did it do? We managed to move through this this micro demand here. If we look at this stuff here, this one here is interesting. Why? Because we managed to move through this area of demand here. When it left, it cut through that. And so that tells us that this is a good one. We have this one here. You can see that we had a trend line here. The trend line broke. The area that broke the trend line is this one here. So this is good. So you want to use the two rules. The first one being supply and demand consumption, and number two is market structure failure, MSF. And these are the two rules that you'll use when qualifying any area of supply and demand. Okay, so here we had we qualified this area by using rule 1, and this one here we qualified this area using rule 2. So you have these two rules. We have another rule when using currency strength, but I'm not going to go over that today because I want to try and focus on keeping things very simple so that you have something you can work with. And so what I'm doing, I've put on a bunch of example trades, and these are all the ones that we're going to look at, and I'm going to walk through these one by one, and then I want to discuss each of them. And so this is the longer term stuff. Let's go down to the bottom. Let's focus on the stuff here. Okay, so if we start off with the first one here, I move it up there. We have this one here. And why is this interesting? We have rule 1 and rule 2. Rule 1 is consumption of opposing supply and demand, and rule 2 is market structure failure. And this one is interesting because why? Well, we have a lot of really good stuff going on here. Number one, we have our trend line, which has been broken by this one here. And we also have this area of demand, which has been consumed as well. So price left, we came down, we accumulated for 2 periods. Price came up, moved sideways, very messy, we went higher, and then we came down. Price left, this area of supply, we caused market structure to fail. We took out this micro demand here, and we tested this, and then price came back down and moved through it. And the origin of this move is up here. Okay, so this is actually qualified using rules 1 and rule 2. So this is a good area for us. And so what I've done is I've simply put on a 1-to-1 risk reward. Okay, so I'm going to sell here. My stop is above the rectangle here, and my target is simply the same size as my stop away. And before I do anything else, I want to show you the configuration of the indicator, just so we're all using the same settings. I have risk reward ratio, this is 2, and price and balance release period, this is 3. Okay, so just set it to that, just so that we're seeing the same thing. Okay, and I won't go into details of what that, I will. I'll just tell you very quickly what this means. So, looking at this risk reward multiplier, that simply tells the indicator that when price leaves an area of supply or demand, it has to move 2 times the size of this rectangle. So the high of the box for supply minus the low of the box, that gives us, let's say, 10 pips. So price has to move 2 times that within 3 periods. So after the close of this candle here, price has to have moved at least 20 pips. If it has, then the indicator will draw this box. If it hasn't, no box will be drawn. Okay, so nice and simple. Goody. So that happened right here. And so this is an exercise that I want you all to try. Okay, so I'm putting these orders on, risk reward 1-to-1. Very, very simple. Put them on and don't even think about it. Put them on and leave them on. Don't fiddle with them, and just make sure that you're always using rules, preferably 1 and 2, but at least one of the rules. And ideally, you want to see opposing supply and demand consumption, because this is the most important one here. Okay, if we have a look at this one here, the indicator told us that this was a good area. Price went up, it came down and tested. Why was this a good area? Well, it was a good area because if we draw, I don't know if this is enabled, let me make sure this is turned on. Trendline Management, and here. Good. So price went up. This area of accumulation, see the white candle, occurred just after the break of the trend line, and then price went down. So this is a nice area of accumulation, because this simply tells us where we have supply, and when price left here, we managed to move below all of this. So this is a first point of reaction, and when price left here, we managed to pretty much move through that. So this is kind of a pre-qualified area. Ideally, we'd like price to come a little bit further above this area, but it didn't. But I'm sure if we go to the smaller time frame, we can actually see what exactly happened. So let me go here, let me mark off the area like that. We go to the 15-minute chart, and you can see here it is. It's right there. So we have here, we have price went down, we tested it and we went down. So this is the first test. The second test went all the way through it. So price is actually, we've gone through it completely. So there's no liquidity there anymore, or limited liquidity, which is why this one here has been qualified. So this would have been an area that you would have considered to trade, or you would have taken for a trade, because this consumed opposing supply. Okay, so interesting trade there. So that's just one example. Okay, so this one is the Euro Australian dollar. We have this trade here that we're gonna try and take. We're gonna simplify this, and we're not gonna look at the quality checklist. We're simply gonna look for these clear releases like this. Okay, good. Okay, let's have a look at the next one. This is a 5-minute supply. Let's see what I mean by 5-minute supply. I don't really look at 5-minute supply, but you can see what's going on here. So if we have a look, we have this one up here. Let's go to the 5-minute chart, and you can see that it looks like this. So we have a high, sorry, a low, a high, a low, high. Price has moved through this, and the origin of this leg is up here. So this is the origin of the move that caused market structure to fail. Okay, and when price left here, what else did we do? Well, we managed to take this out. Okay, and eventually we managed to take this out down here. Okay, so I'm going to take the top of, let's look at this. I drew that wrong. I just want you to know why. Okay, so where's the candle that broke away? Oh, this one is the candle that broke away, because the body of this candle is not within the range of the previous. Is the body of this in the range of the previous? Yes, 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 yes. So this one you'd actually draw like this. Okay, and this is absolutely spot on. This is exactly where price came to when it tested and moved higher. This is not a very good area because price didn't leave this area in a hurry, but the fact that price reacted down here is telling us that we have demand down at this level. Okay, so I mean, this is, so this is gone. It's been tested once, twice, 3 times. On the 4th test it went through. The origin of this move is up here. So this one caused this area of demand to be consumed, and this one, and caused market structure to fail. This is on the 5-minute chart. So I put an order in there to sell. Okay, so we're going to put that in. It's going to mark that off like that, like we've done, and it looks like this. And so if we analyze this a little bit closer, I want to see this one here. This is a candle that left because the body of this one is not within the range of the previous. So ideally you could put it like that, but you want to lower it a little bit, a pip or two, just to make sure that you get it in the trade. So I've done that, a risk reward 1-to-1. So there's that one. Let me put this back on, and let me make sure that the trend line is being managed, because I like that. Trendline Management. Just going to save this template. Save. Right. Goodies. Let's go back to the hourly chart. So we have that one. Let's have a look at this one. This is a 15-minute area. And so price rallied. We came down. We accumulated for a few periods, and then we shot up, and we haven't been back since then. So let's just have a look at this for a minute and draw maybe a couple of areas that might be interesting to us. So we have this one. This is nice, just simply because the breakaway price has not been back there since that. We have this one, we have this one, we have this one, and I like that. Let's see, so having a look at why these areas are areas, I mean, this one is pretty far away from price. We want to focus on the stuff that's closest to price. Okay, so if we have a look at this one here, why is this interesting to us? Well, if we have a look, we'll draw a trend line from here to here. We had, on this point here, we had a small area of demand. This is demand because when price left here, we managed to move above these highs here. And this is the origin of this move, which caused market structure to failure, and we managed to consume this area of demand here, which is now gone. So that qualifies this one. This one here. Why this one? Let's have a look. Well, we can see that we had, on a small time frame, we had a trend line here. It's broken. Price moved above these highs here. Another reason is that we have just a really nice kind of the pattern that goes, price comes down, accumulates, then it goes up. And when price left, it managed to trade above and beyond the area, so it has not been back. And so you can see that price cut away and price has not been back. There's black space from the release until current price. So we like this one here. So this one caused a trend line to be broken, which is good. So this is qualified. Have a look at this one. We had like that. So we had kind of, we had a trend line. We could go from here to here, or from here to here. This is now gone. Consume all this micro supply here, which qualifies this one here. So we have a few areas that we can look at here. So I'm going to take this one. We could also look at this one, but what we don't have with this one, this hasn't really managed to do anything. Also, when price came down, it accumulated. We're just reacting at this one pretty much, and now we've managed to move up. So I'm expecting price to come a little bit deeper than this. Ideally, we want price to move through an opposing swing point. So if we want to look at this one here, so we have price that comes up, it comes back down, we have a higher low, and price moves above this. So we have, if we want to draw a trend line, for example, we could have the low here, first low, second low here, we have a high, and price managed to move above. If you want to look at this one here, price must move above this high here, and this is going back to rule 1, the consumption of opposing supply. And so this one, even though it's not supply, it's still an important limit or area because it was a major turning point for the current time frame, and the fact that price moves through it tells us that we have some strength in this area just here. Okay, so targeting this one for an entry. We also have this one over here. Let's have a look at that. Why is this interesting? Well, this is interesting because, well, it looks nice. I like the way that it's formed, it's shaped. What I don't like it's kind of in the middle. So if we go back to what we spoke about earlier on, where we have the origin of a move, so it goes like this. This is 10 out of 10. This is 0 out of 10. The further price goes up here, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, like so. The further we get to the origin of a move, the higher the probability. And this is like maybe a 7 out of 10. So this is okay. And also we had some demand in here. It was tested once, and on the second one, price accumulated on it, and then it cut through. So that tells us that we have strength here. So we want to try and sell. So this is qualified using rule number 1. Okay. Good. So we've got that one, and put these on a demo account 1-to-1. Don't question them, just put them on and leave them alone. All right. Okay, let's look at this one as well. We have another one here. Almost got filled. This is interesting because we qualified this using both rules. So let me get this drawing thingy sorted. We go like this. We have our trend line. Price kind of managed to, well, eventually move through it. The origin of that move is here. We have this area of demand, which is gone. The area that did it is this one here, which has been tested. So we don't expect this to hold again in the future, which it didn't. You can see we had 1 test, 2 tests. Price accumulated below it, then cut through it. And so now we're going to the origin of what? Of this move down. So we have 10. We have 1. Oops. 1. And so we have 2, 3, 6, 8, 9, 10. So we're pretty close to the origin of the move. We're actually, this is probably a pretty close to a 10. The 10 being the high of the area of supply, just below is the 9. And we're trading about a 9. You can see how price has reacted so far just below our level. And so I'm expecting, if price does manage to come back, then I'm expecting to have a bit of a bounce. We don't know if it will, but it's certainly worth a shot. So that's what I like. We had the trend line break. We had the consumption of opposing, in this case, demand, which is a really good reason. And you notice, I'm doing this on the hourly chart, but if we go to the 15-minute chart, I said here that it's a 15-minute area. Let's go and have a look. You can see pretty clearly on the 15-minute chart. It's qualified. The indicator is saying here, yes, here we have it. We have the price coming up. It's accumulating. Then it cuts below. You can see how price is kind of trading up and through into this area, and all of a sudden price cut away. That tells us this is fresh supply because it was introduced at the end of this move higher. Price was drifting higher. It's trading nice and efficiently, and something entered the market here to drive price lower. It could have been news, thin liquidity to the downside, who knows, but there's something up here that's holding price, which is why it's been marked, and it's why we're going to try and have a look at it, see if we can get it to work for us. Okay, go back to the hourly chart, zoom out. This is counter trend. You can see very clearly that we should be selling, but the reason I took this one is because I like the way price moved away very quickly. See, price moved away very quickly. We could be reacting on supply further here to the left. We don't know. But what we do know is that whatever it is it's up there. It looks like it's a bit of a level to protect. And so this is why we want to try and trade this one here. Pretty close to it. Maybe it'll hold again once price gets back there. We have a look at the next one. We have this one here. Zoom out. What are we doing? We have pretty similar situation as we did before. How we kind of got to a high. See, price is drifting higher. Nice swings higher. Then price really moved. Let me get rid of some of these levels. There we are. Price really moved away off here. We had a trend line break here. We've consumed all sorts of opposing, in this case, demand. Let's have a look at those. Well, first of all, let me draw these in by hand. We have this one here, which is gone. This is interesting because when price left here, we did what? We took this one out here. So this one is gone. This one was in play. It's tested a few times and it cut through it. What else do we have? We have this one here. Once, twice, 3 times. Price has pretty much moved through that, and the origin of this move is where? It's right there. So here we have our 9 out of 10. And here we have our 0 out of 10. So you can see as we move higher, the probabilities increase. And so this is good because it's the origin of this move. And so we're just hoping that price manages to wriggle up here. We onboard some additional buyers, and then price manages to move low. And you can see here that we have this hourly area marked off by the white rectangle that's embedded within a blue area, which is a 4-hour area. So here we have nested supply, which I really like. Additionally, below price, what do we have? Well, we have some nested areas below as well. We have this one here, which has not really been tested. This one has not been tested either, so this one is fresh. So what we're going to do is we're gonna take this one because we want to get like a sample size, okay? And so what I'm going to do is I'm going to draw the rectangle like this. I'm going to put this trade on. So this is the demo account. We got about $10,000 pending order. How it can be just half a lot. It's 22 pips. We're buying at 90.46. 90.46. The stop is 90.22. And we're going to put a comment in there. We want to put like H4/H1 demand, just so we know what it is that we're looking the price to react on. We're going to put it on, move this back to around a 1-to-1, and we'll play that and see what happens. And you can see that it looks pretty interesting to us. We go down to the 50-minute chart and have a closer look at this. We'll delete that. You can see that this is the price nodule that price reacted on before it left. So price might come down to this area here, have a reaction, and then move high. And you can actually see that this is a qualified 15-minute. Is it 15 minutes? Hold the mouse over. This is a 30-minute area of demand that's marked off here on this 15-minute chart. So that looks pretty interesting. You can see, we look here. It doesn't look very interesting on the 5-minute chart, does it? I mean, there's nothing really invigorating about this push away. It's kind of a slow, sloppy move. So this is when it can pay off to move down to the smaller time frames and have a proper look. And so what I'm going to do, due to the information that I was able to gather on the area by going to the smaller time frames, as you can see, I mean this is not a very interesting area. You can see that. I mean, this looks pretty good here. How price managed to move away. It was tested once, twice. It's been tested twice, and ultimately, price did move away, but it's not a very beautiful release. What I do prefer is this down here. So I'm going to take this and I'm going to move that down there, just above. I'm going to adjust my stop, bring it a little bit closer, like so. I'm going to put that 1-to-1 roughly. We're going to leave that like that. Okay, that's what I like. I think that one's okay. And why is this one interesting? Well, this is interesting because what we do have is that if you go here on the hourly chart, we have our trend line from here to here, and this is kind of the origin. This is the latest swing. You could actually argue that this one is here. We could go like this as well. You can see that prices looks like it's having a bit of a tough time kind of respecting that trend line. So market instructor is looking to break down, which is good because we just want to go a little bit higher, but then it potentially break down. It'll bring us to the origin of this leg. Okay, so you're always focusing on the origin of the leg. I mean all of this is hanging on this swing here. Okay, and when price comes up here, this is the most recent leg, and the origin of this leg is down here. So this is 0 out of 10, this is 10 out of 10, and this is 9 out of 10. Ideally, we want to be looking for those 7 to 10 out of 10 areas. And this is going to be a 9 out of 10, and this is also a 9 out of 10. Okay. All right. Let's move to the next one. Same one. I'm trading anything. Here you can see I don't care what it is that I'm trading. I just want a sample size to trade. Okay. So here on the hourly chart, we're zooming out. What are we doing? Are we buying or are we selling? Well, let's draw our trend line from this major low to this major low. Is price going higher or lower? We have a low, a high, a higher low, and a higher high. So price is moving higher on this chart. Keep in mind that we are in a downtrend on the 4-hour chart, but we don't care about that because we want to just take as many trades as possible just so that we can kind of interact with the market. And so looking at this one here, we have this 1-hour area that's nested within this 4-hour area. And this is what we're targeting as our entry. And so if we have a look at this, you can see that, I mean, we had a trend line that's going from here to here. Price came up, we tested this kind of mess in here, we came back down, and this area of demand here is responsible for causing market structure to failure and a lot of other stuff. I mean, we had this is gone. We had this, which is also gone. We tested it, we came down. We had one of those kind of those bearish, bull flag, where you have kind of like a flag. It goes up and it kind of goes like that, then it kind of has a push higher. And this is a nice pattern because when price goes up and it starts to come down, it's simply looking for liquidity required to push price higher. So that's what we're seeing there. So this was able to remove this one here and this one here. And so this is qualified using rules 1 plus rules 2. This is rule 1 and this is rule 2. Okay, and so price has not been back since. You can see since the release, black space. This is lovely. So price will probably continue to wriggle down to here, and then it either will or won't respect this area and move a little bit higher. And then you'll ask yourself the question, I mean, what are we doing? Are we going to take this one here or this one here? Well, the easy answer to that is that you want to take the one that's closest to price. Okay, and this one is closer to price than that. This is a child. Why is this a child? Because this one is reacting to this one. Okay, so due to the fact that this is a reaction to this, it means that this is not independently established. This one is, this one isn't. So this is the child and this is the parent. So this is higher probability, this is lower probability. But we have our move, we have 0, we have 10, we still have, we have 9, 8, 7. Okay, and so we're still buying a number higher than 7. So I mean, the further we move into here, the better. So we're going to be buying at like a 10, 9, and 8 out of 10, which I think is just fine. So we'll give it a shot. If it doesn't work, if price does move down, you could maybe re-enter down here, or you could alternatively move your stop down to below this parent. But then the problem means that if you want to have a one-to-one here, then you're going to have to go somewhere up here. And so here we could easily, price could come down, have a bounce, hit the target, and then move lower. Where if price comes back here, comes up and miss the target and come a little bit down and start to threaten your stop. And so you have to just keep all of those things in mind. Good. Let me remove all these. We'll move to the next one. 15-minute, another one. What do we have here? This is a 15-minute trade, because if you look on the hourly trade, it doesn't look very appealing at all, and I hope you can see why. Well, first of all, we look at this. We have the origins from here to here. So far, it could go lower. 10, 0, 9. This is 8. But the thing I don't like about this is that price has already been back up to this area a lot, and it's been back to like here. So this is the area of supply that's currently holding. So we have a lot of stuff in here which I don't like. But it says it's a 15-minute area, and so we're going to have to go to the 15-minute chart to understand why it's interesting. And you come here on the 15-minute chart, then you can see why it might be something worth looking at. So we have our market structure failure here, like that, and we have this area of demand tested once, gone, and often here we have support becomes resistance. It's kind of tested into it. Now price cut through it, and so this one here was qualified using 1 and 2. 1, 2. Okay. Now price is kind of messing around at the bottom there. We don't know what's going to happen, but we need to engage in the market as much as possible. And the reason I'm doing this on the hourly and lower is because then we're going to get a bigger sample size a lot faster. You can't do this on the daily, weekly, monthly, because then you'll be sitting waiting forever, months, and that's not going to be a very useful education. So we'll do like this. So if I go like that, we'll look at the next one. I'm going to go through all of these positions one by one, or most of them, then we can see why they're interesting to us. Okay. You go here, hourly chart. What's going on? Well, we have the most recent leg is this one. Oops, wrong thing. The most recent leg is this one here. And we have this one, and we have this one. The most recent one is here. So this is what we're looking at. So you want to look at this one, and you want to focus on where price is. You can see here that we have our 10, 9, 8, and 0, like so. So we have our levels. You can see, so on and so forth. And so we are below this one. And the reason I like the 8 is because of, you can see here it says 15-minute demand. The reason I like it is because you can see this gorgeous pattern just here. This is very nice right there. I love that. So this is a really, really delicious pattern. Surprise. Formed this low. We tested something down here, a really tiny area of demand. We left, accumulated left. And so we had this. This one broke this one, and this one also managed to consume all this stuff here. So we have, it's not pretty, but we have, I wouldn't even look at that. This is difficult. We have this one here. We have this one here. We have this, oops. We have this one here. This is not, that's not, it's pretty ugly. We have this one here. Have that there. It only came to the lows here. We'll just mark that off. We'll take the whole candle like so. So price came up to it, moved through it. It's gone. This was tested. Tested again, gone. And price continued to move all the way through this one. So these ones here are all gone. These aren't. This is not pretty. This isn't interesting. This is the only one that's interesting here, and this is the one that price managed to move through. And so this one is qualified using 1 and 2 once again. If you look on the Here on the 50-minute chart, it's just a really nice pattern. So I'm expecting price to have a bit of a bounce there. Okay, let's have a look at this one here. This is 15-minute once more. Let's have a look. So we have this one here. Price went up. We have our leg lower. 10, 0. This is a 10. It's pretty close to the top. So this is interesting. So we're probably going to have a bit of a bounce there. And then we have this one, which is the origin of that one. We have our 0. We have our 10. So here we have a 9. Most of these are going to be 9 because this is where the indicator is going to find these level for us. And this is just a vanilla 1 hour area. And we take this one here because this is the one that's still untested and closest to price. Okay, of course we can take the ones over here, but price might not get there. It has to consume this one and all this micro joy in here and eventually come down to this kind of mess here, which it'll probably cut through easily because it's all tested, hence the dotted box. And it's going to move lower and challenge the other stuff. But this is the one that's closest to price, so this is the one we want to focus on. So what we need to do is we're going to move this up here, 82, go like that. So this is the buy, and let's see which one this is. I didn't put a comment on there. Naughty. This one here. I didn't put one there. Let's see. It must be a mistake. I mean, there is. There's 15-minute supply here. So you go to the 50-minute chart, and you can see why. Just rallied, accumulated, and then cut away quickly, which I like. So we have a very clear pattern on the 15. It's a 15-minute chart, so be very careful of that. Price doesn't respect the 15-minute areas of supply and demand as it does the bigger ones, but we need to get our hands dirty here. So those are those two. Look at the Euro USD hourly chart. What do we have here? Well, price is approaching this. We had a 4-hour area of supply. It's been tested once. In the process, this area of hourly supply was tested, been tested once, and this one here has moved higher, just here, and here we can go from here, just looks something like that. Broken, qualifying this, moving above this high and moving through all of this. We have some micro supply in here, we have this here. That's debatable, nothing really interesting here. We had this one here. And the area that caused the break of that is ultimately in here. Oops. Let me zoom in a little. Oops, a little bit too rapido. Right here. You can see here that price came, tested the bottom of this. Now it's kind of working on it. But I think we're going to probably move a little bit higher before we continue moving lower from here. So that's why we have that one marked off. Let's have a look at this one. This is a 30-minute area. So zooming out, we're buying or selling. We're going down, we're selling. So I haven't zoomed out on all of these trades, but I hope that you remember to do this. And so we're looking at the most recent kind of swing. So if we zoom out, and let's draw these in. Just take the biggest ones. So from here to here. We're really taking the big ones here. That's what we have. And so this is kind of in the middle. So here we have 10, we have 0. So this is like maybe about a 5. So this is a lower probability. But what I do like about this one is I like the structure of it. I like the price. Price came down and then price cut away. And last time price came close to the area, just to the lows here, we managed to move below this low here. So this tells us that there's some selling interest once price comes to this price area. So I just simply put an entry to sell there. And if you mark off the low here, then we zoom out just to see what it's managed to accomplish. And you can see that when price left here, we had this nice area of demand tested. price left here, we cut through it. So this one here is responsible for this one right here, for taking out this one here. This is the origin of it. This one here was the one that cut through it. It's been tested once. We're not trading that again. Only the first test. We went down. We went a little bit deeper. This caused a break of this trend line, which means we trade this one here. Price went into it, beyond it, and now price looks to be stabilizing at the bottom. So we're forming a base, and now we're forming these areas of demand, hence the rectangles forming below price as price slowly wriggles higher on its way to this one here, which is where we have an order to sell. All right. So that's what we have there. Goody. Let's have a look at a couple more. What do we have on the hourly chart? Zoom out. What are we doing? Buying or selling? Well, you can see that price is actually, we look at the major swings, really major swings, boom, 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 like so. You can see that we're actually forming this, I don't know if you're into Gartley patterns, I'm certainly not, but looks like that. So we're probably going to move higher. I don't know, Gartley patterns, whatever, but it's looking like this, you know, like this. If any of you are familiar with those, and we're like the bat pattern, it's kind of happening at demand. So we're probably going to see price, actually we've seen price drift a little bit higher from here, which is what we're seeing pretty clearly. So if we look at this, keep in mind that price has already been back to here. You can see all of these pullbacks kind of clearing out the road to the upside here. So you want to look to sell above that. And we have this nice sell-off, rally, and then sell-off. And this is interesting because we had this area of demand. It's been tested a few times. It's gone. Which area did it? This one here. So this was a 1 hour area. You can see it here. If you go to the smaller time frames, you can probably have to go to the 50-minute chart to kind of find it, and you can see it much more clearer just here. And so we're looking at this now, like so. So this is what we're looking at here. When price left here, we managed to move through this area of demand, hence its validation. So it's actually a 15-minute area of supply, more so than an hourly, because it's much clearer on the 15-minute chart. Goody. Then we also have this one down here. Price came to it, but we haven't really managed to do anything. And this is good because it's reacting to a 1 hour area here. So if we zoom out a little bit, here it is. You can see it's reacting to this. Parent, child, the child held. When I managed to see a nice wriggle to the upside. So if you look here, we have our upward sloping trend line, like so. Or hourly uptrend. We're gnawing away at this 4 hour supply as price wriggles higher. So we're moving higher up into here. Again, we're grading this 10, 0. We're probably 10, 9, 8, 7. That was a funny 7. 7. So for this one, you wouldn't want to go for anything less than an 8, because this is, you look at this, let me zoom in. If you look at this candle right here, this one, you can see this is showing us a micro pullback, how price went down, closed, went back up, and then down. That tells us that price has already been back up to this level, to this high here. So we're taking a risk by taking this trade. Ideally, we'd want to have a close look at this, because this is probably a child and this is a parent in here. We're going to have a look at that because we want to clarify that. So we've got a 15-minute chart. Have a look. Yes, and you can see that parent, child. So we're looking at this. It's been tested once, and our price moved away from there. But we're going to leave it because we want to get our hands dirty. We'll put it back 1 to 1, like so. Like so, like that. So that's what we have there. And we have a few other positions, but they're pretty much the same. That's what I'm looking at. But I hope this video kind of helps illustrate what we're doing on the smaller time frames. I think I'll wrap it up for now. But Have any questions, please send them in, and otherwise I'll see you all in the forum. Thanks for watching.